want to highlight an asymptote that's happening before our very eyes. A deadly virus that has now become uncontainable. This is the debt of the United States over the past 90 years. Trump is on pace to double the debt of Obama, who doubled the debt of Bush, who doubled the debt of Clinton. Our debt hit an asymptote several years ago. It's now too late to contain. The coronavirus today has already begun to expose the brokenness of the underlying financial system. If you want to predict the future of financial assets, you need only predict the future of this one image. In the last 30 years, the top 1% has gained $21 trillion in wealth. Now, this may sound like a lot until measured against the bottom 50%, who during the same span have lost $900 billion. Then this number becomes obscene. 4 decades of central bank monetary manipulation, lower and lower interest rates has caused free money to flow to the very top. According to Forbes magazine, the top 20 people in the world are worth $1.31 trillion. According to the Federal Reserve, the bottom 3.75 billion people in the world are worth $1.3 trillion. This means that 20 people in the world are worth more than the bottom half of the world combined. If these numbers don't scare you, they should. They represent an unstable math problem. A Black Swan event is coming. We are now 1 minute to midnight. A Black Swan event is an event so big, it changes the entirety of mankind's perspective. They are characterized by their extreme rarity and impact. These events cause catastrophic damage to the economy and cannot be predicted by any standard forecasting tools. A black swan, by definition, is unpredictable. At least that's the conventional wisdom. We have seen this movie before. In 1929, easy monetary policies had pushed the wealth into the hands of a few. The wealth gap then was the largest in human history. It led to anger, which led to the election of populist leaders. These leaders adopted policies of nationalism and tariffs. The easy money would lead to a massive asset bubble. The Roaring Twenties saw stocks quadruple in the decade. The Warren Buffett indicator would hit 141% in 1929. The Warren Buffett indicator hit 155% in January of 2020. The signs then are the exact same signs today. Back then, they caused the Great Depression. What's coming next is the Great Devaluation. Central bankers, politicians, and financial pundits will do their best to maintain calm, insert liquidity, and soothe markets. When systems are sound, these efforts can be effective. When systems are broken, these efforts only exacerbate the problem. When systems are this fragile, they are susceptible to catastrophic failure. A small catalyst can demolish structures that have remained intact for hundreds of years. The Etruscans believed that everything in life is cyclical, that things have a beginning, a middle, and an end. Human life follows this same construct. We go from childhood to young adults, to mature adults, and old age. So rather than look at our lives as linear and on a straight line, we should view them as circular. They called this cycle the saeculum, which means a long life. It's made up of 4 generations, 22 years apart, equaling roughly 90 years. The Etruscans marked their calendars from crisis moment to crisis moment. These events happened at the end of every saeculum. If you think the idea of the saeculum sounds crazy, simply take a look at American history. 1776, the Revolutionary War. 1864, the Civil War. One saeculum later, World War II. These wars were the results of crisis moments that played out in the decade before. The super cycle is turning once again. We are at that crisis moment. The stock market collapse that began the Great Depression was 90 years ago. The great devaluation coming in the 2020s will witness the largest transfer of wealth in human history. As currencies will be devalued, this devaluation will cause a collapse. Gold will surge to unthinkable new heights. Government action and regulations will be employed to defend against the next depression. The Great Depression led to the election of Franklin Delano Roosevelt. Roosevelt instituted social programs, the New Deal, infrastructure spending, the GI Bill. These were programs that were massive fiscal stimulus. Today, Bernie Sanders, Elizabeth Warren, and the populist left are looking to institute social programs, free health care, wiping away student debt, and universal basic income. The Great Depression of the 1930s offers a glimpse into the great devaluation coming in the 2020s. Mankind is on the verge of making the exact same mistake. Last year, the United States had its largest budget deficit in history of $1.2 trillion. What's alarming is that this has occurred in what we're being told is the greatest economy of all time. Unemployment is at all-time lows, stocks are at all-time highs, all of which begs an important question. If this is how we run our budgets in the best of times, how big will our deficits become when the economy becomes slightly less than the best? The answer is that this is not the best economy of all time. This is an economy built on debt. We are about to learn from the wisdom of thousands of years of finance. We cannot borrow our way into growth. In fact, at this point, growth becomes an obstacle. The more we grow, the more we owe. Any organic growth means higher rates, which also mean higher costs. Any growth at this point will be knocked down by higher interest costs in the future. We have come full circle. In the 1930s, interest rates averaged 0.63%. By the late 70s, interest rates hit highs of 20%. In the last decade, interest rates have averaged 0.63%. The circle is now complete. Through the process, we have learned the following. Monetary policies are really socialism for the wealthy. They drive wealth into the hands of the few. Fiscal policies are good for the masses and bad for the wealthy. Fiscal policies are good for the masses. Notice that by the year 1975, after 4 decades of fiscal policy, the wealth gap was the most evenly distributed in human history. Over the past 40 years, monetary policy has forced the flow of wealth into the hands of a few. Mark Twain famously said, "History may not repeat itself, but it sure does rhyme." If you're trying to predict the future of what's coming next, do allow history to be your guide. The wealth gap has created an unstable math problem. Does this line of wealth distribution today look familiar? A Black Swan event is coming. What do you think comes next? The great devaluation of the 2020s will witness the greatest transfer of wealth in human history. My name's Adam Baratta. Thank you so much for your time today.
Earlier today, the Federal Open Market Committee announced a 0.5 percentage point reduction in the target range for the federal funds rate, bringing that range to 1 to 1.25%. My colleagues and I took this action to help the U.S. economy keep strong in the face of new risks to the economic outlook. The fundamentals of the U.S. economy remain strong.
Having a news conference tomorrow to talk about various things that we're doing economically. They'll be very major, including obviously the payroll tax cut. And so we'll be meeting again tomorrow afternoon. We'll be coming back from the Senate. We have a lot of very important meetings set up. And we'll have a press conference sometime after that. And we'll explain what we're doing on an economic standpoint and from an economic standpoint. But they will be very dramatic, and we have a great economy. We have a very strong economy, but this blindsided the world, and I think we've handled it very, very well. I think they've done a great job. The people behind me have done a great job.
We are working out details right now, so I don't want to quote any numbers ahead of time. You make a proposal, we're checking with the leaders of both parties in both houses and see what is doable and where the tough nuts are going to be. So I don't want to get into any detail. I think the outline of the thing is very important. The payroll tax holiday is probably the most important, powerful piece of this. But on the other hand, I want to draw attention. We can use administration and executive authority, again, to help unpaid sick leave people, which is very important. We can use it for the medium and smaller businesses, which is very important. Other distressed sectors, we have some leverage on tax deferral.